All right, my friends, welcome to another edition of the Heritage Wealth Planning YouTube channel. Today, we're going to talk about a follow-up to my discussion on Social Security benefits when it comes to required minimum distributions. And I'm going to use a page right out of the Social Security playbook that's called Medicare Premiums for Higher Income Beneficiaries. So let's just go right into it because I think it's incredibly important to understand how this works because I do not think a lot of people understand how the significance of Medicare premiums and how much you're going to have to pay with just a little bit more income than you might have anticipated. Let me just make sure my mic is good. All right, good. So let me open up this just a tad more. So this is directly from the Social Security publication page on their socialsecurity.gov, and I'll link to it in the show notes. And you can see Medicare premiums rules for higher income beneficiaries. Now, you might be thinking higher income beneficiaries is not applicable to you. And I'd say, think again, because I'm going to show you in particular a widow or a divorcee, a single taxpayer, be it a widow and never married or divorcee. I'll show you how quickly you can become a higher income beneficiary. Now, two things I want to point out. One is a beneficiary for Medicare is someone who's actually on the Medicare system and drawing Medicare benefits. That means you're over 65 years old. That's a beneficiary. There are taxpayers. I'm a taxpayer. If you're under 65 or even if you're over 65 and working, you're paying into the system and you may not be a beneficiary. So remember, there's two things we're talking about. One is a beneficiary of Medicare, someone who's drawing Medicare benefits, and again, over 65, versus a taxpayer who's not receiving benefits on Medicare. That person is paying a amount. You look at your FICA taxes, all right? And now if you look at FICA, the vast majority of your tax payments are going to Social Security. A little bit is going to Medicare, but about 25% or so of your FICA payment is actually going to Medicare, which is part of the reason why Medicare is hurting big time when it comes to its financial solvency. Social Security looks like it's in good shape compared to Medicare, and that's pretty scary because Social Security has its own issues to contend with for sure. But one of the reasons is because Medicare certainly isn't taxing people enough. There's just no other way around that. Now, as a free market capitalist, I wish we did not have Medicare as mandated by law to jump on it when you're 65 and older. It'd be nice if we had some free market alternatives, and we do with Medicare Advantage choices and supplemental policies. But for the fundamental health insurance that you carry at 65, you're mandated to be on Medicare. And rightly or wrongly, it's just the way it is. And we can wish for, all day long other things, but that is the situation we're in today. And frankly, I don't think that'll ever change. So you're in Medicare at 65. You're paying into it as you work. Every paycheck you receive, part of your taxes go to Medicare. Now, what happens is if you're a certain income level, if you're married filing jointly with 250 or above, or a single taxpayer with 200,000 or above as modified adjusted gross income, which I'll talk about here in a second, you're also going to pay a net investment income tax to Medicare as well, what I call the Medicare surtax. And that's 3.8% of your capital gains, your dividends, or your interest. So once you break that 250 threshold or 200 married filing jointly versus single, you're going to add another 3.8% to your investment income, net investment income tax. All right. So that's another way that Medicare is trying to get solvent that President Obama signed. I think it was in 2009 was that tax law, maybe 2010. And within that same tax law, if you're above a certain threshold, you're also going to pay 0.9% more on your income, not just on your capital gains, interest, and dividend, but on your income as well. You're going to pay 0.9% more as a way to means test Medicare premiums or Medicare benefits that you're paying into. So you have your FICA taxes, about 25% goes to pay Medicare. And then if you're a certain threshold of income, you're going to have net investment income tax at 3.8%. And then also 0.9% as a surtax as well on all your income as well. So right there, 250,000 married filing jointly is pretty high. Certainly vast majority, more than the vast majority of Americans. But if you think we're done there, I don't think so. Because Medicare just is not solvent financially. It's just not. Now, remember, Medicare and Medicaid are two completely separate things. Okay, so Medicaid is for poor people. Medicare is for people who are 65 and above. one of my pet peeves in financial planning is these people out there who are using as a technique. I'll make you poor so you can qualify for Medicaid. That way you don't have to sacrifice your assets you've saved. You can transfer them to your children, and you can qualify for Medicaid as a health insurance. And I just, for the love of me, I don't understand that. If you've ever been to a Medicaid facility, it's certainly not a place you want your mom to be in the last 5 to 10 years of her life. It's just not. And secondly, I mean, you live in America, for heaven's sake. I mean, you've been blessed with a significant amount of resources that the vast majority of the world does not have. I mean, I do think you should pay it. You should pay your Medicare premiums like everybody else has to do, and as opposed to making you look poor on paper so you can transfer your funds to your children so they can be wealthier. I don't like it, actually. And yeah, that's a moral observation. You might disagree morally, and that's fine. But at the end of the day, that's Medicaid is for poor people, and Medicare is for folks who are retired. So let's talk specifically about this. Higher income beneficiaries. And I just chuckle because I'm going to show you real quickly what a higher income beneficiary looks like. It's pretty funny, actually. So again, I'll put the link in the show notes here, and they get you. This is a wonderful publication you should use. I would say if you're 63, you should be jumping on board, because remember, once you're 65, you have to file for Medicare, or else there are significant penalties. But if you're 63 years old, is a tax record they use to determine if you're a higher income beneficiary at 65. So basically, there's a 2-year lag time. So if you're 63, you don't think you need to talk about Medicare until you're 65. And actually, it's 3 months before you turn 65. Oh, no. I disagree with that. If you're 63, you should really start looking. In fact, you should probably look at it when you hit 60. But certainly if you're 63, you should start looking at your Medicare options. All right. So let's just see if I can't make this even a little bit bigger. Rules for higher income beneficiaries. If you have higher income, the law requires an adjustment to your monthly Medicare Part B and Medicare prescription drug coverage, which we'll forever call Medicare Part D. Higher income beneficiaries pay higher premiums for Part B and Part D. This affects less than 5% of people with Medicare, so most people don't pay a higher premium. And that drives me crazy, because the insinuation is, yeah, you don't have to worry about it, no big deal. Yes, you do, because Medicare is not solvent, folks. Just because 95% of the people aren't paying it now does not mean 95% of the people won't paying it in the future. In fact, when I show you what higher income beneficiaries actually mean, you'll be like, huh? I'm telling you. So just because they're making it seem like the vast majority of people don't pay, that might not be you. In fact, I have a feeling that as we go forward, more and more people will be paying Medicare higher premiums. I like this one. If you have higher income, you'll pay an additional premium amount for Medicare Part B and D. We call this amount the income-related monthly adjustment. I call it the premium tax. Here's how it works. Medicare helps. Let me turn this off here real quick. I always turn my notifications off, which I thought I had. There we go. Medicare pays, Part B helps pay for your doctor's services and outpatient care, which you may or may not be aware of. It pays about 75% of your Part B premium, and the beneficiary, you pay about 25% of your Part B premium. However, if you're a higher income beneficiary, you'll pay up to 80% of the total cost, depending on what you report to the IRS. And they talk about prescription drugs coverage in there as well, and that's Part D. If you're a higher income beneficiary with Medicare, we already talked about that. All right. So this is what I like here. How does Social Security determine if I must pay higher premiums? So stop what you're doing. Stop. Watch this. We use a sliding scale to make adjustments based on your modified adjusted gross income, your MAGI. Your MAGI is your total adjusted gross income and tax-exempt interest income. So like I said, and how Social Security uses your tax-exempt interest to determine the taxes that you pay on your benefits, the same is applicable to Medicare premiums. Two things to consider here. Your tax-exempt interest is included in your modified adjusted gross income, my friends. On top of that, adjusted gross income is before you have deductions, before you take your standard deductions or any, if you're itemizing, any itemizations. If you have any exemptions, and those are kind of gone away now, but if you have any exemptions, those are gone. That's not included in your modified adjusted gross income. So if you look at the top page of your 1040, Your MAGI, modified adjusted gross income, is right there. It's the second page of your 1040, which tells you what your taxable income. So I guess cannot stress this enough. This modified adjusted gross income is before standard deductions or itemizations. Okay, hugely important to understand. And they talk about here, if you're single and your MAGI is greater than 85,000, you'll pay higher premiums, and they'll tell us the charts right there. 85,000 modified adjusted gross income before standard deductions, plus you're adding your tax exempt interest in as well. Now I'll show you, it's not that difficult to get there. And again, they talk about Medicare Part D. Which tax return does Social Security use? To determine your 2018 income-related adjustment amounts, we use a 2016 tax return. All right, so generally this information is from a tax return filed in 2017 for tax year 2016. So it's your 2016, the tax return you file in 2017 for the 2016 tax year is what they use in 2018. So just kind of think about a 2-year lag. All right, so they're using 2016's taxes to determine your 2018 payment. That's why the 63 years old, it should come front and center to you that if you're 63 years old, the income you make this year is going to affect your premiums that you pay on Medicare going forward in 2000 when you hit 65. Now, here's what they say. What if my income has gone down? The second bullet point, you and your spouse stop working and reduce your worked hours. You do have the ability to contact Social Security to ask for a basically appeal right here. And here's where it shows you. You can actually appeal for that you stopped working, you retired. And Social Security may or may not grant you that. I've literally no clue. I've never heard of anyone go through that. I just don't know. But if you stopped working at 65 and they're using your taxes from 60 when you're 63 years old, there's a pretty significant difference there between income. You better doggone get on the phone with Social Security to call them to say, hey, I'd like to file to challenge what you guys are using for my taxes. And again, whether or not they grant that, I just don't know. I'm ignorant. So if you know something, by all means, let me know. But let me show you why it's important. Modified adjusted gross income, we talked about that. Individuals of MAGI less than 85,000, their standard premium is $134. Watch this. The minute you break over 85,000, your standard premium is 39% above that. You add an extra $53 to that premium of $134. Plus, you add another 35% of Medicare Part D. I think the prescription drug coverage, I think your premium is $34, if I'm not mistaken. So basically, you're adding another 35% to that, plus a 35% to your premium for Part B. It doesn't stop there, but watch this. The minute you break 107, all right, so we're talking, what's that, $22,000 difference in income from here to there. $22,000 of income difference. That's a 20% increase. Your premiums double. It goes up from 134 as your standard to basically 134 premium plus the income-related adjustment or the tax. Medicare goes up, your Part D doubles as well. So $22,000 more of modified gross income increases your Medicare Part B and Part D premium by 100%. Eesh, that's tough. Now watch this. Now this may or may not be you. It probably won't be many people, but once you hit 160, your standard premium goes up 300%. It goes up from 134 to what's that? 434. That's a 300% roughly increase. And same with Part D. So now you're paying another almost $400 a month. That's $5,000 a year, folks. More in Medicare Part B and Part D premiums because you got above 160. Now, the likelihood of that happening to many people, no, not much. But if you have any size IRA, you could easily find yourself there simply because the case study I used with Jane and Bob, where Jane is a widow at 85, 88, 90 years old, and Bob is now deceased, and Jane only has one standard deduction, but she has all these RMDs, and her taxable income is high. But this is before standard deductions. The RMDs alone makes her modified adjusted gross income well above the $85,000 threshold. And if you recall, Jane only had $400,000 at 55 years old, which she did not touch until she was 70, and only let it accrue. Expected rate of return was 6%. And when she had that, that alone made her RMDs, just her RMDs alone, well above $80,000, $90,000 when she got up in age, which means her Medicare Part B and Part D doubled and even tripled. It's not good. So that's what you got to be considerate of. Now, here they talk about married but filing separately. We don't recommend doing that many times, but that'd be up for you and your CPA to discuss. Here's, if you disagree, you can talk to Social Security. Do you really want to get involved in talking to the feds? I don't, but at the end of the day, they give you an option here to request a reconsideration, which is good to know. And I certainly imagine they're probably, I don't know what to imagine. I've never been through that. So if that has been you and you've been through it, I'd love to hear how that worked for you. All right, so that not much more on this I want to talk about. That is the gist of Medicare Part B and Part D premiums, and how your required minimum distributions can affect you more so than just on your individual tax return, more so than just on your tax bracket, but also on the Medicare premiums that you pay. I hope this is helpful, guys. The planning to be done is when you're in your 50s. There's no getting around that. You certainly can start planning in your 60s, but once you have RMDs and you're in 70, there's not a whole lot you can do at that point. The IRS is going to get their money fair and square. They get it first. The only option you have is to give your RMDs away to charity. And I just, I'd love for you to do that, but can you afford to do that? I don't know. So think it through as you're in your 50s to make sure you're planning for the inevitable and increase in Medicare Part B and Part D premiums, as well as all the other tax-related issues that go with it. Okay, don't forget to subscribe down below there, Heritage Wealth Planning. Go to the website, heritagewealthplanning.com. Thumbs up are always helpful. Thumbs up, please. And then don't forget to hit the notification tab that you'll be notified of future content. Hey, look forward to seeing you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.